point to rapid tech stock growth and stretched market valuations as sign of a bubble. While tech leaders like Jeff Bezos and Sam Altman acknowledge some risks, they speak optimistically about AI's long-term benefits. And joining us now to unpack all of this is Brendan Caldwell, director at Caldwell Securities Limited. Brendan, thanks so much for joining us today.
Well, thank you, Wyatt. It'll be an interesting one.
Of course. Let's just perhaps start out with the dot-com bubble in 1999. Can you walk us through kind of what happened with respect to that situation and how it kind of is similar to what we're experiencing now?
Well, we can start with similar, and then if you want, we'll move on to different. Similarities, you had interest rates were lowered for reasons other than good fundamental economic ones. So what had happened in 1998 was that a big hedge fund called Long-Term Capital blew up. And that's when we thought that was a substantial financial crisis, having no idea what was coming a decade later. Anyway, Long-Term Capital blew up, and Alan Greenspan, the then chair of the US Federal Reserve, learning from the playbook of back in 1929, where there was a financial crisis, and rather than lowering rates, they raised rates to quote, weed out speculators, which was more than the stock market crash responsible for the Great Depression. So rather than raising rates, they cut rates in 98. Well, what happened was that so much of that money didn't go into the real economy because it wasn't needed by the real economy. It went into the financial markets. So very cheap money drove up the price of investable assets, share prices among them. And the hottest stocks did the best. And at that time, when the internet was still very much in its infancy, that's where all the money was pouring. So it went roaring up. Flash forward now, what is it, a quarter of a century or more, interest rates are being lowered in the US in particular for other than economic reasons. There's huge amounts of political pressure from the White House, which is intervening in what is supposed to be an independent Federal Reserve in unprecedented ways, going so far as to fire Fed governors who have a nominal legal issues, nominal relative to what some in the White House have faced, and replacing them with their own people, with the idea that getting rates down will boost stuff. Among the stuff that it'll boost are stock markets. Investable assets respond quickest and most energetically to lower interest rates. So as we look forward here, we may be in a bubble, but if the central banks keep cutting rates, and it is anticipated the US Federal Reserve will cut maybe twice more between now and the end of the year, you can see that bubble continue to grow and grow in size and not necessarily burst in the next year or possibly even two.
You touch on something with respect to kind of the unpredictability of what the Trump administration has done in terms of firing of various Fed board governors, et cetera. And it kind of speaks to another pattern with respect to what they've done via Trump's Big Beautiful Bill as an example, where he tried to essentially make it so that artificial intelligence technologies could not be regulated for a period of 10 plus years. And it's why you had people like Marjorie Taylor Greene, who is otherwise a very loyal supporter of President Trump, who was opposed to the bill for that very reason. And again, it all kind of goes back to this idea of unpredictability from the Trump administration. How much harder, or I guess just maybe what are the implications with respect to investment when you have that level of unpredictability that is obviously a very big factor that's at play?
Predictability is good in some ways at some times, but that the capital markets are inherently unpredictable, I think, is one of their great strengths, not a negative. When you say unpredictable, it does tend to have negative connotations. But the fact that nobody exactly knows what's going to happen is why the capital markets are, generally speaking, better at allocating capital. Not to say that they're perfect, but than say governments, because the unpredictable nature goes into the investment. Now, there is a recency bias there. That is to say, if things have been going up recently, they're always going to go up. There is an overweening confidence that is often associated with bubbles, euphoria, if you will. Mm-hmm. And there is always a period of overbuilding. It goes at least as far back as the railroads, There was a huge bubble in the late 19th century around the construction of railroads, which were going to connect everything and everywhere just in time for the automobile to arrive. And no sooner had they built out railroads to max capacity than something came along to replace it. So we're here in AI. The idea that they could regulate AI, as some even AI, those at the forefront of AI have asked to be done. Everybody take a pause, everybody take a break. That's not how new technology works. Everybody goes into it with great enthusiasm, knowing full well, at least one should know full well, that much of what is tried will fail. Many of the companies that attempt will fail. But at the end, we have something far more interesting. So flash forward 25 years from the dot-com bubble, I don't think anybody could have predicted just a massive amount of use that all of those cables that got laid, all the fiber optic that got put down, and all the technology that got developed are now putting use for. But it just sometimes takes longer than expected. And there's for every Google and Microsoft and Amazon, there are a lot of ones that didn't make it along the way, which is why I guess they call them unicorns.
I think something that kind of stands as a testament to the rapid development of a lot of these AI technologies is, in just to kind of give an anecdote here, I'm obviously much younger than most news anchors are, in the sense of, again, being in high school as well. And even this morning, my high school English class, like there's little examples now where they're getting students to write essays, for example, on lockdown browsers so that they can't access these types of technologies, something that even 5 years ago, people probably would not have predicted. So I guess just given the rapid growth of these technologies and how they're kind of growing so quickly on the exchanges, are we experiencing an AI bubble, is it fair to say?
Well, all technologies take time to adapt, and the real advantage your generation has, I'm about middle age for newscasters, I think. Um, but the real advantage your generation has is you're at the forefront of all this. You will understand it far more easily as a first language when it will be a very distant and ill-spoken second with a heavy accent if I ever learn to speak it at all. So you are able to a much greater degree, define what this future will look like. My generation may help finance it. We may encourage you. We may invest in you, but we're not going to define it in the same way. So you're going to need to find ways to make it make sense, and it may mean education needs to change. In my youth, you wrote an essay, and while cheating was possible, it wasn't like this where you could literally give the essay question to an AI bot and have it spit out a 1,500-word essay for you, where you insert a few spelling mistakes just to make it look real. Uh, that didn't exist in my day, but it may mean that the essay form goes away and we do something different. Maybe there's more in-person oral exams. Who knows?
Hmm.
But it will need to change as technology changes.
All right, we'll leave it there. Brendan Caldwell, thank you so much for your time tonight.
Thank you.